Good morning, everybody. Hey, welcome to Tuesday, 2 days away from Turkey Day. Hope your week is going well. Hey, you see here a picture of James and I. He loves to watch football on TV. We're watching the FSU Miami game that day. But it was good to get to visit them about a week and a half ago. But that's James and I watching a little football. So, hey, as we get going today, we've got some retail reporting, and we've got some other news coming as well. And so we'll talk about that here in just a second when Dave joins us up next.
105.7 Light FM, Andy and Nancy Wilson and Hart. Every time I play a record from them, I keep thinking about what they looked like in 1976 when I had them in the studio with me. Dang, they were gorgeous ladies. Heck of a guitarist, too. It's 8:43 now. I'm sorry, when you get old memories start floating back in. Time to check in on your money and see what Wall Street's doing this morning. On the phone, we have Phillip Statler from Statler Financial Services in downtown Sebring. Phillip, good morning. How are you today?
Hey, good morning, Dave. Doing well. Thinking about turkey and dressing and all that good stuff here in a couple days. But we got at least a day and a half of stock trading first.
Absolutely. Well, yeah, maybe a day and a quarter because everybody heads for the offices for the free eggnog early tomorrow. Boy, did we have a party day yesterday. Dow up 204 points, S&P up 33, NASDAQ up 159. That was a full 1.13%, and you and I were kind of noodling through before we went on the air. There really wasn't a rational reason for it yesterday, was there?
Not that I could see anywhere. I mean, I just think that, it's one of those days you don't know what to think, right? Because everything had a good day, and but I can't explain it sometimes.
It's just one of those things. I mean, we did have kind of a flat day before that, so maybe they were just catching up with an uptrend. The Standard & Poor's is officially out of correction territory now. I mean, happy days are here again. We can go buy stocks like chiclets because the economy is just going to be happy as a pig, right?
Yeah, I find that a little interesting because I get some folks that really think that where's the reading headline is 2024 is going to test the bottom of the S&P 500.
I was reading that. We got one major brokerage firm saying we're going to test bottom in 24. It's the tale of two stories, and we're into a political year when we're going to have one side of the fence saying, "Boy, everything is El Stinko," and the incumbents are going to be saying, "Oh, things are absolutely great. You just don't realize it."
Yeah, and then you get the other side that's it's going to be the year from where, and everything's going to bottom and tank, and so you get the extremes, right? And everybody's trying to make a name for themselves and say, "Oh, I was right."
Yep. Yeah. Between the politicians telling us completely different stories, trying to get elected, and the analysts with their columns all saying, "I'm predicting this." It'll just all sink into the background if they're wrong, but boy, if they're right, they're going to be ballyhooing it until the next financial crisis comes up. It's hard to know who to trust, isn't it?
It is, because everybody's got their own opinion and their own reasoning of why they believe what they believe. And so it's, sometimes it's hard to draw a final conclusion that makes any sense.
Oh, it absolutely is. Economic-wise, we don't have a lot happening until 10 this morning, but we do have some market-moving junk going on. We're going to be getting existing home sales. They're expected to go down by just a tinge from the previous report. Month over month, they're expecting about a 1.5% decline, at least out of the expectations that I'm reading. And then at 2 this afternoon, we get an early Thanksgiving gift because the Federal Reserve is going to release the minutes from last month's meeting to hopefully catch a day in which there's more traders on and we don't get a wild swing depending upon what they say. But if they put it out tomorrow afternoon, it's going to be 10 people on the floor of the exchange to react, and we get about 500-point change if there's a surprise.
That's right. You don't want to catch a surprise on a limited trading day, because then that volatility will drive the price one way or another.
Absolutely. And so they're doing it today when hopefully a few more of the traders are actually on the floor and can react with some circumspect to it. Futures kind of trended down after midnight last night, and it looks like they're still holding a little bit on the negative side this morning. Got a few good news and bad news pieces on the retail reports that are coming out. I did notice that Dick's Sporting Goods actually raised their expectations for the rest of the year. How was the rest of their report?
They did well. They beat by a substantial amount. They came in at like $2.85. They were expected to come in at $2.44. So that was a good number. And revenue was about $100 million more than expected as well. So some good news there when we look at where they are now. And then, like you said, we've got some stuff happening that they expect to bounce back this quarter and actually end up in pretty good shape. And so they're trading up substantially, like 7.6% this morning, Dave.
They sure are busy on their email marketing. I know that. So evidently it's working for them at the moment. Who else we got this morning?
Hey, we've got some other retail. Let's talk about Abercrombie and Fitch. It didn't show up on my original sheet, but I found it interesting because they really had a pretty good quarter across the board. Earnings beat. Came in at $1.83 versus $1.18. Revenue was over $1 billion. So one of the things that caught my attention was the headline is their sales were up 20% from the previous quarter. Some good news there from that standpoint. However, it's not really helping their stock price this morning. And I think that's because it's more about the clothing industry. Because most of those are trading down this morning. We'll see here in just a minute, but they're trading down 5.3% this morning.
Wow, after a good quarter. Abercrombie and Fitch is one of those niche businesses that's been trying to search for a new niche after their trendy young customer base aged into middle age and kind of deserted them. One quarter worth of good performance is good news, but I guess you need more than that if you want to make the market happy with them, right?
Yeah, even like American Eagle Outfitters came out. They beat on both the top and bottom line for their third quarter, and they're still offering solid guidance for the current quarter. But I got to tell you, they're getting beat up today. They're down over 16% today.
Crud! What do you got to do to gain in a stock price?
I'm not sure. Burlington, on the other hand, is bouncing up higher this morning. They did raise the lower end of their full year guidance. And they also said November's off to a strong start because of some cooler weather. So they're up the opposite of American Eagle. They're up almost 13% this morning.
Maybe the trick is this is an indication of expectations for the holiday season. I'm hearing you saying the full price stores are getting hammered even after a decent quarter, and the off price stores are doing better on expectations.
Yeah, I mean, even Kohl's. Now, Kohl's did have a somewhat rough quarter. They're reported weaker expected revenue for the third quarter than was expected. Their same store sales were down 5.5%. They were expected to be down 3.8%. So that wasn't good. They lowered their full year same store outlook. So you can imagine they're down 5.25% this morning. We did see though that, Best Buy not doing so well either. If I look at the Best Buy numbers, they beat on the last quarter, pretty good. I mean, $1.29 versus $1.18. Revenue didn't miss though. They did miss revenue. So that wasn't good. They did lower their expectations for this next quarter, cut their full year outlook. So they're trading down 4.4% this morning.
Boy, retail is playing a rough room this season, aren't they?
They really are. I'm thinking, that finally credit card debt is, I think, finally catching up with folks. And heading into this holiday season, I think we're going to see less spending because people don't have the credit to do it. And they definitely don't have the cash.
Yeah, the consumer credit card balance report that we had out a couple of weeks ago was just absolutely frightening. And I would imagine that probably will have an impact on retail because the average Christmas expenditure going to be more out of cash than it will be off credit cards this year.
Yep, that's for sure.
All right. Any other indications of good news?
That's really what we got today, Dave. That's the
Well,
the
shucks.
tale of retail.
Okay. We are going to get some NVIDIA stuff later on this morning. If you aren't familiar with NVIDIA, for the folks that don't watch it carefully, they're the company that's gotten so fat and sassy off of AI because they make some of the cards that do real well in processing artificial intelligence. So they've been flying probably higher than I've got a right to fly. And based upon yesterday, it's going to be a good report, or at least that's what they're expecting, right?
Yeah, that's what they think. Now it'll come out after the market closes today. So it's but the expectation is, because yesterday the stock hit an all-time high.
Okay.
And so the
Well,
expectation is they're going to do well.
give us something to talk about in the morning. Looking at the futures down the line, how are we doing 45 minutes before we open this morning?
A lot of red ink on the index side, Dave. We got the Dow down almost 0.2%. The S&P 500 is down 0.25%, and the NASDAQ 100 is down almost 0.5%. Throw the Russell 2000 in there, down 0.8 this morning. So definitely some solid red colors going into the open. On the other side, we've got silver and gold making a bounce. Silver's up a little over 0.75%. Gold is up 0.9. Now, just a few minutes ago, it had actually crossed over 2,000, but now it's back down to $1,998 an ounce. And crude oil, the lowest I've seen it in a little while, down another 1.1% to $76.95 a barrel right now.
I saw gas for $2.99 a gallon yesterday, just up the road from us. Yeah.
Actually, one of the companies I saw, the cash price was $2.95.
Wow. I was kind of surprised the 2 on the first digit on the sign still worked.
Well, I saw that somebody came out and said we can expect the lowest gas prices over Thanksgiving holidays since 2020.
We'll take that happily. Overseas markets, the Asian Rim was mixed at 6 a.m. at the close this morning. They looked at our futures and said, uh-oh. Mainland Chinese markets were off by just a tinge. Taiwan was up considerably, though, so it was a legitimate mixed bag. Over in Europe, I'm generally down halfway through their trading day, some of them pretty substantially. Over in Great Britain, they're down by 0.75%. The overall European index is down by about 0.25% halfway through their trading day. Getting retirement together, getting a plan, and then, well, trusting it counts for a lot. Kind of nice to have an expert help me with that plan. Phillip, how do I get your eyes involved?
Then give us a call at 863-382-0037 to schedule their core retirement design. And then catch us on the Statler Financial Radio Show this weekend, Saturday, 6 a.m. and 10. I'll get it right in a minute, Dave. I'm having a hard time this morning.
Yeah, don't
6
change
a.m.
me.
and noon.
We just changed the website. Don't change the time already on me.
6 a.m. and noon on Saturday. Thanksgiving's got me all messed up today. And then 10 o'clock Sunday morning on News Talk 730 at 95.3 FM.
All righty. Thank you so much, sir. We'll see you in the morning, all right?
All right. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Remember.
Hey, folks, again, I want to thank you for joining us today. Have a great one. Talk to you again tomorrow morning before we head into Thanksgiving. Until then, have a great day.